these KRC20 inscriptions are tailor-made catalysts, not for retail investors, but for the institutional level investors who are, at the end of the day, the number one holders of stable coins like USTD. A common misconception, specifically within the Kaspa community, is once there's a listing on Binance or Coinbase, the exchanges will then go out and scoop up huge bags of Kaspa. In fact, the exchanges deal the business to market makers who then own these enormous bags of altcoins and the biggest bag of stable coins you can imagine. Kaspa's business proposition is they're providing a better product, more decentralization, more security, faster speeds, and cheaper than the leading stablecoin providers right now. Using just USTD Tether as an example, of course, the granddaddy fundamental go-to is Ethereum's version, the ERC20. We all know that it's pricey to use and it's slow, and that's just during downtimes. During peaks in the bull market, it's even more expensive and has more latency problems. The number 2 runner-up, so this is who Kaspa's going to truly go head-to-head against, is Tron, a proof-of-stake coin that can offer USTD transactions pretty fast and fairly cheap. Kaspa has an unmatchable security with the decentralization of its proof-of-work network. That's what Jonathan Saplinsky and the team are offering to these institutional level investors. Of course, once the institutions like your project, they like the network, they have all the connections to pull the levers to make sure that your DeFi projects are the most popular in the crypto space. And of course, as the Fed adds liquidity to the market by dropping interest rates, this directly plays into the pocket of these power players like market makers who own hundreds of billions of dollars worth of cryptocurrency and stable coins. In terms of charting the breakout, there's been a lot of talks of this cup and handle. We'll start by addressing this by itself. In order to have a classic pattern statistic, 18 days, which is the length of this cup formation on Kaspa, this is just barely long enough time frame to have a real drastic effect on price. Meanwhile, zooming out, we've seen Kaspa with huge, like 120-day cup formations. Looking inside of, let's just say, April's previous cup from a year ago, it was made of a multitude of these rounded bottom cup formations all chained together. What's to say that this 18-day cup inside a 90-day rounded bottom isn't just a piece of a larger puzzle with a slower breakout in hand? My point being is market-wide, everybody's talking about a potential breakout right now, and it seems extremely awkward. Specifically, based on this recent uptake, was based on CPI numbers. That's the cost of urban goods in day-to-day life. Of course, behind the scenes, they actually doctored this CPI beat, which only beat it by a smidge, like a 0.1%, because they removed coffee right out of the equation. Coffee's price is extremely high, and if they wanted to get a beat to make it look like inflation's on the way down, they had to remove that, which goes to show that Powell is basically going to do whatever he wants with interest rates. Now, they are scheduled for 2 cuts within 2024. As those cuts get made, that's when crypto is going to start launching to the upside. Of course, the Kaspa team, knowing this, is running the release of their upgrades parallel with an FOMC meeting that they're hoping has some dovish news for us. Realistically, Powell's not going to be cutting rates on June 15th. The earliest possible date would be the end of July and indefinitely by early fall. Thus, this giant curve in the Kaspa's price that we can see right now, if this 18-day cup formation suddenly broke to the upside, it would be extremely lopsided and really not make any sense. See this giant red line we can see on the Kaspa chart? that's showing June 15th. That's when the FOMC dates come out. Zooming in on the Kaspa chart, we can see the gravitational field by this gray dotted line and how on the 10th of May, we ran into two intersecting resistance trend line with this golden dotted line, which resembled the top of the cup formation established on the 23rd of April, and the gravitational field. They both intersected, rejecting the candle. We're about to make another pass at the gravitational field. At 12.5 cents, we'll make contact on this Wednesday, the 22nd, all the way until Saturday, the 25th. That will be Kaspa's next chance to break out of the gravitational field of the x-axis. Now, historically, this has always been a very bullish event. So start tuning into your Kaspa charts right then to notice whether or not we either get a breakout or a possible rejection. Jumping over to the DXY chart, as this positive CPI number came out, we can see it took a flash to the downside. Because of the nature of the doctored report and how it was such a minuscule beat anyway, it's expected that the US dollar will start gaining some of its traction. This will be risk off, and it will take away the liquidity that Bitcoin and altcoins, including Kaspa, need to get that early breakout before the CPI meeting. So keeping one eye on the DXY chart on Monday to see if it starts to recover, or if it starts to dump even lower, that means great. That means we might actually get a bit of a breakout before Powell even steps to the podium, where he can possibly then supernova the market to an extreme upside. In my opinion, this early breakout right before an FOMC meeting is just so statistically improbable that it's not going to happen for Kaspa, Bitcoin, or the altcoins. It's far more likely that we're just going to see chop and sideways action until June 15th. Keep your eye on the Kaspa chart, though, starting on Wednesday until Saturday, to see what happens with this gravitational field, as there's a chance that the price can get rejected until it finds lower support, or we could actually break free and perhaps start testing this 13.3 mark once again, forming an ascending triangle into June 15th before a potential breakout right there. Keep in mind, guys, one of the biggest Kaspa bulls that there is, but 60 days in the lifespan of a crypto market is absolutely nothing. But to a retail trader, it's timing. You can get in the market at the right time, the wrong time, a bit early or a bit late, and that directly affects your bottom line. So let's be mindful of the FOMC meetings. On Monday, the first chart that you want to look at is the DXY chart. The dollar starts to lose momentum even more and takes another step to the downside. Great. Looks like this early breakout might actually be gelling. It starts to scoot back up and recover the dip that it just had. Start to keep your guard up and realize that sideways, downward, choppy motion into the June 15th meeting is most likely what's going to be at hand. And there's a massive date coming up for Kaspa this week. Starting on Wednesdays, we're going to challenge the gravitational field again. This is huge and indefinitely very much resembles the wick-off method. I'm sure you guys have seen this flashing around social media. As we leave the x-axis, we'll start to find support on the y-axis. And whether or not this 12-cent level is going to hold as we test the 13.3 higher level riding into the June 15th meeting, or in the other scenario, we get rejected this week. As the DXY might be scooting higher, we'll reach that gravitational field and find a lower low around 11.5, riding that into the June 15th date. These are the upcoming days. These are the charts that we need to take a look at to better ascertain our timing as retail traders, because the institutions are going to be game on for Kaspa. I'm sure they're licking their chops waiting to get their hands on some USTD and the other financial products Kaspa has to offer the biggest players in the entire crypto world. Thanks for checking out this video. We'll catch you on the next one.